Hello, it's Robert Miner with Dynamic Traders Group with this week's DT Trade Strategies for the week beginning July 22nd. A short video we do for our Twitter and YouTube followers so you can get a little idea of what we do every day for our DT Report subscribers in the videos and the updates. If you like this video, if you learned something from it, hit the like button if you would. Hit the subscribe button. Let your trader friends know about it. The more the merrier. Helps us out. Might help you out also. So let's get started. We're going to take a look at what I think is going to be the best setup of the week, upcoming week, and we'll take a look at it in some detail. Let's take a look at this bar chart. Our videos are meant to be educational so you can learn how to make decisions in any market in any time frame. So there's an important lesson I think you're going to learn here in the next 5 minutes or so. Take a look at this data. Is this an impulsive bear trend or is it a correction? Which, if we just looked at that data, what does that data look like? Correction or impulse trend? Well, in Elliott wave terms, it would look like just that data more like a correction. The primary guideline to help us identify a correction is the overlap rule, or overlap guideline. And that's where we have, in this case, a decline, and then the market comes up and trades within the range of the prior decline, makes a new low, comes back up, trades in the range, makes a new low, comes back up, trades in the range. This is not impulsive, just in general. It's corrective, more than likely anyway. So if you look just at this data, it would look very much corrective. However, we need to look at that within the context of what came before, because there may be another possibility for this. So let me add a bunch of data on here from this top, and this happens to be the Euro daily data. So coming down from the high back in May, overall it's pretty impulsive. Probable 1, a 2, it's a little irregular A, B, C. If that's the case, let me put this in. That's real typical of a 3, isn't it? A fast move, much greater in time and price than the 1, and then a little correction for the wave 4. And then what's going on here? Can this be a wave 5? Isn't a 5 and an impulse trend itself supposed to subdivide into 5 ways and be an impulse trend? Well, typically it is. What's the circumstance when it's not? What's the wave structure when the wave 5 is not your typical impulse trend? Well, that's when it's called an ending diagonal. And an ending diagonal is where the swings keep overlapping with each other. And if that's coming on the tail end of what can be subdivided into a 1, a 2, a 3, and a 4, that's called a wave 5 ending diagonal that should complete this decline begun back in the May high. So that's very significant. For one, it would mean that we're in the final stages of completing the trend that began back, not in July, back in May, several months ago. So that's very significant in itself. What else does an ending diagonal, fifth wave ending diagonal, represent? What's typically the aftermath of an ending diagonal? Well, the typical aftermath is a rather sharp reversal. Sometimes it can be a pretty brutal reversal. That means that when this ending diagonal is complete, we would typically anticipate having a sharp reversal against this bear trend, and potentially beginning a higher time frame bull trend, but at the very least a trend that would last several weeks and let's just say retrace at least 50% of this decline. Now that's a lot. And what's the beauty of this is we've got some technical indicators that indicate we're within the final few bars if we haven't already completed this ending diagonal. So let's go back to this idea that at the end of an ending diagonal, a reversal is usually more brutal and dramatic than typical. And think of it logically. Look at this pattern here coming down. New low, little a rally, another new low. We came back and traded up in that range. Just a couple days down to new low, bounces back up to the range. A couple days down, bounces up. There's a lot of buying power that keeps coming into this market every time it sells off and makes a new low. That's why it's not an impulsive decline. And also think about it as if this was kind of a spring. It's winding up. It's winding up. It's gathering a lot of energy, a lot of frustrated buyers that once the sellers give up, is that the buying power, this is kind of a Gann type of description, is the buying power will overcome the selling power, possibly in a fairly dramatic way. So just think about this, is that the sellers are, while they're so-called in control, meaning it is a net bear trend, it's not really an impulsive bear trend at all, and buying keeps coming into the market every time it makes a new low. So be prepared for that, because the next daily momentum bull reversal we have, or in this case, a close above one spot 1805, should signal that the weekly low is complete, and at the least we would anticipate is a correction to this decline from back in the May high. So that would be fairly significant whenever the low is complete. We could easily make a new low early next week, but because the euro, as well as the dollar, of course, trades inversely, frequently makes reversals within a day or two of a Fed announcement, which one is this Wednesday, we want to be extra alert in the next 2 or 3 days for a reversal and a great setup on the long side for a probable weekly advance. This is the weekly data in the euro. Again, we've just been 8 weeks up. Last week was 8 weeks down, and last week was the 3rd week of the weekly momentums dual look back oversold, and typically a price reversal is made by the 4th bar regardless of the time frame of when a market gets dual look back oversold or overbought. So we want to be particularly sensitive to any reversal signals. And of course, every euro trader in the world is aware that the euro has come down to this March-April lows, very significant lows, and they've done it when the technicals are oversold and it's in a position to complete a weekly low. So this I think is going to be the trade of the upcoming week. In this upcoming week, we've got reversals probable for almost every major financial market. So probable top in the dollar, probable low in the euro, probable top in the S&P. It looks like it's coming into a wave 5 of 5 of 5, right into that price zone, right into the time next week. Another one to really be aware of is notes and bonds. Notes and bonds are probably coming into a top that's potentially a major wave 4 corrective high. That'll be not just a multi-week top, but potentially a multi-month top. Let's look at one other market. And before we continue on, look at last week's video of Bitcoin and crude. Everything we talked about there is coming to pass right now. So a great crude setup is probably going to be made, just as described last week, in the next day or two. And Bitcoin, also, the next 2 to 3 days are going to be critical. If it's not able to close above the level that we talked about last week, it's probably going to roll over and die. So be prepared for that. Let's look at one more market here. So this is gold daily data, and it's just the close only data, the daily closes. Gold and the euro are highly correlated. Whenever one or the other of them looks like it's in a position to make a reversal, I always go and look at the other to see what the potential setup is in the other. Now, they don't always trend together. There's a lot of periods of time when they trend opposite each other, but in general they will make some reversals about the same time. Let me just clean that up. So here's gold daily data, and what I wanted to bring to your attention is gold has probably already completed a weekly low, and this is what we call a 1 or A advance. It's making a 2 or B correction. And where we're at right now with gold is, as of Friday, the daily momentums are dual look back oversold. That's significant. That means we're very close to making a daily low, which should be a wave 2 or B corrective low, and then followed by the continuation of the weekly bull trend to above the high made in mid-July. Let me clean that up also. So just be aware of that. We're on the verge of probably completing a corrective low, and possibly like a 2 to 3 week net bull trend. Not necessarily is it going to go to a new high, but boy, what a great trade setup And that's what we're looking at. We're not looking to forecast the market. We're looking to identify trades with a high probability setup. So we got gold, silver, and the GDX are all in substantially the same position. Here is silver. And silver made a new low recently, as we anticipated, when gold did not, because silver needed to finish this 5-wave decline. And it has made a new low as anticipated. If we look at the intraday data, here we are from what I had labeled as a wave 4 high, impulsive wave 1 down, corrective wave 2, impulsive wave 3, potential little ABC correction for wave 4 into Thursday's high. If that's the case, over the next day or two, silver would likely make a new low, but that should be the final low before it completes a weekly low. Now, it's not a forecast that's going to make a new low, but if it does make a new low, actually that would be my letter to Santa Claus to get long, because it would be fulfilling a perfect wave 5 of 5. Otherwise, if it doesn't make a new low, because the daily momentums have already made a reversal, a close above 2580 signals that the low should be complete. So very, very significant trade setup coming up in gold, silver, and of course the GDX. This is the GDX, the mining stocks. GDX in the same, basically the same position, 1 through 4, and then we made a new low as anticipated. This is the one thing to bring to your attention, is this is not a type of pattern from where lows are typically made. This is more like a corrective pattern, which would indicate another day or two sideways to down to a new low. Just as with silver and actually with gold, another day or two sideways to down. But we should be within 2 to 3 days maximum before we complete the weekly lows in gold, silver, and the GDX for just ideal setups on the long side with minimal capital exposure. So again, that's our objective. Identify conditions with a high probability outcome and acceptable capital exposure to make trades. You want to be a forecaster? You're listening to the wrong guy. You're on the wrong page. You need to go somewhere else. But if you want to learn to trade, that's what we're all about, is actually making specific trade decisions. That's it for today. Stay healthy. I hope everybody has a fantastic week. I'll probably be back with you. Oh, that's right. No, next week's my vacation week. I won't be back with a video next week, but I will the week after that. Everybody take care.